Congratulations to our Russian friend who loved Palantir at $45 a share. You're getting closer to even. You're only down now 82% from your high. Palantir just crushed it.
Don't call it a comeback.
Don't call it a comeback. They were expected to do 3 cents a share. They made 4 cents per share. Their first quarterly net income and revenue of $508.6 million versus the estimated $502.6 million. Now, guys, if you've watched our videos before, we change our tune based on valuation. Palantir, when it was at $45 a share, we said, maybe we're interested around $5 or $6 a share. It has fallen considerably. It has had 8, probably 9 now. What's the free cash flow in this one, Mo, if you could check into that? This is probably the 9th quarter in a row of free cash flow. Is that correct? Cash from operation, free cash flow.
Yep.
Yes.
Yep. 9th in a row.
9th quarter in a row of positive free cash flow. The company has a great balance sheet. And last time we checked, last quarter, it was $2.3 billion of cash with no debt. It's currently up 12% per share. It was up 15 at one point. We're going to see what happens. Now it's 11.5. Is it coming back a little bit? I have no idea. So Palantir this to me is the future of data. Mm-hmm. Like I look at, the reason I'm interested in this company is they're doing a lot with governments and major corporations to use data to solve their problems, whatever that may be. There's going to be a lot of data out there when you look at their average sale price, their average contract, but you have to remember, they are going for smaller contracts in order to get more volume coming in. They don't need these 60, 70, $80 million contracts anymore. They want to get smaller contracts. I think some as low as $5 or $10 million in order to grow their revenue. What are you seeing on their press release right now, Mo?
So total revenue grew 18% year over year. This is for fourth quarter highlights.
It's actually not that great.
Yeah. Commercial grew 11%. Government grew 23%.
Okay.
Now they have highlights here for the year. Commercial grew 29%. Government grew 19%. Overall grew 24% of total revenue.
Gotcha.
So they're growing both sides, which is good. Let's see.
Adjusted free cash flow was about 11% free cash flow margin. Cash from operations of $224 million, representing a 12% margin.
Customer count grew 55%. That's pretty good.
And that's how they got. And so the other thing is there an average price per contract? Because I guarantee that is lower now in order to grow their contract. They're cutting more customers 55%. There's only so many countries and companies you can go to get a $50 million contract from, right?
Yeah.
And you're on their press release currently, right?
Yes, this is their press release they just put out.
GAAP EPS of 0 up is 1 cent per share. I imagine the non-GAAP was the 4. I don't know but this is based off of what we see on the Twitter. And by the way, if you're on Twitter, follow me. I'm very active talking about investing. And I also have the same name on Instagram, but I talk mostly about my personal life and fun things. That's me on Twitter. Now, guys, it's currently 4:11 p.m. on February 13th, Eastern time. You're probably going to watch this within the hour, and you'll see this is how fast we react to major important news. Palantir, we do believe, is an important one because of the up and down it's been. Is it up 15% again? No, 14 now. Subscribe to the channel. We talk about value investing. We are value investors. We don't say we are like that other idiot Russian who believes in Palantir at $45. He claims they're a value investor. He has no idea what investing is. What we're here to do is look at every investment as the present value of all future cash flow. And our goal is that when the market beats up a stock, we want to buy it because we believe the fundamentals haven't changed, but the market's reaction to short-term response, like for us, great, they beat by a penny. Does that justify 13%? I don't know. It seems like a stretch. Just seems like a stretch. Yes, they beat on one quarter. We don't look at quarterly results as a way to justify our beliefs. What are you looking at?
So this is a tweet from somebody, and they tagged CNN Fast Money, so I'm guessing they're talking about Palantir right now. Earnings are good. CEO is open to sell the company.
Really? Okay.
I'm just reading Twitter. I mean, wow. I'm going to pull up CNBC.
All right. Well, let's find that out. And maybe I'll never get my my investment in Palantir. In full disclosure, I have puts on Palantir at lower prices, much lower than this. And when that means, guys, is if you're new to the channel, a put is I sold somebody the right to force me to buy the stock at a lower price. Well, it can be any price, but I picked a lower price at some date in the future, right? So if I maybe picked $5 for 2 years from now, I might never see this. It might never hit $5. But I'm okay with that because somebody's paying me the right to do that, and I get income along the way in order to do that. That is a very important aspect of what Mo and I do. We sell a lot of puts to get stocks we want at prices we want. We're being paid to wait. And that's a very, very valuable thing you can do if you have a large enough portfolio and position size in companies. That's what we love doing. What are they saying, Mo? Anything?
No, they're not talking about it right now. And there's nothing posted on their website as of right now.
All right, I'm going to go through the analyst estimates. So they're expected this year to make 17 cents a share according to the 17 analysts out there. And they're expected to grow to 31 cents a share according to the 3 analysts out there 3 years from now. So good growth, but it's not exactly anything to write home about. What's 31 cents times 20 for a growing company? $6.20. I mean, if that's true, they're not going to grow that. That's not going to be very good for the company. But look at this revenue growth, Mo. They're talking about 22% this year, 25% next year, 25%, 23% according to analysts.
Solid.
Yeah, this company has a lot of potential. Let's look at the 8 pillars. Not enough data on a lot of this because they're a new company, new publicly traded company, right? Or they just don't have enough information because they have a lot of negative stuff going on. Their return on invested capital in last year, not including this most recent quarter, is negative. But remember, guys, this is where I want you guys to understand where we stand on investments. Just because a company is losing money doesn't mean it's worth nothing. That's something we get pigeonholed into. We're not those people. What we believe is every investment's the present value of all future cash flow. And the next year or 2 could be, or 3, let me put it this way. Let's say you're at a company that generated the following years, minus 5 billion, then minus 3 billion, then even, then 5, then 10, then $20 billion. Is this not worth something? You're going to generate 30, 35, 30, $27 billion in cash flow over the next 6 years. What are you willing to pay to get $27 billion in cash flow over the next 6 years? The hard part is sticking with it if negative 3 becomes negative 4 for some reason, and you go, oh shoot, are these all going to be wrong?
Right.
That's why we have margin of safety. That's why we only buy with a margin of safety. Go ahead, Mo.
That tweet was deleted.
Oh, it has since been deleted.
Since been deleted. So there you go.
Interesting.
That's Twitter.
Okay. So here's what I want to do. I actually want to use our stock analyzer tool to come up with some sort of value on Palantir.
Okay.
Now, it's going to be hard because here are the things I like about Palantir before we get into that. Look at this gross margin. 78.6%.
It's huge.
That's 10% higher. That's 1,000 basis points, 10% higher than Microsoft.
Yeah.
Now, there's no bottom line profit margin because they're spending a lot of money to grow.
Right.
So the question is, what will that eventually lead to? When you have this kind of profit margin, gross margin, it's hard not to make a ton of money. Yeah. And look at Microsoft. They make, after taxes and overhead, 25 to 30% a year. Mm-hmm. And their gross margin is 68%.
Right.
So could Palantir be the same thing? Maybe.
See?
So we're going to use our stock. What was that, Mo?
Time will tell.
Correct.
All right.
We're going to use our stock analyzer tool. And this conversation about Palantir is very popular in our chat. And if you want to have some conversations about this, guys, investing is when you don't understand things about investing, like I didn't for a long time and I'm still learning, you have fear. And the best way to overcome that fear and to be a great investor is to understand. The more you learn, the less you fear. It's a very big thing I say on this channel. The community has a lot to do with this. The software does. So if you want to try it, it's $7 for 7 days. Check it out, everythingmoney.com. It has been a very popular option. It gives people the opportunity. It's for $7. What if you're out? Some big deal. And our normal price is $29 a month. It's going to $39 soon. So those people who sign up for the $7 get locked in at the $29 rate when they choose to stick. And by the way, I think our success rate is like 95% of people who do the $7 thing stay.
You're going to love it if you try it.
Yeah, absolutely. All right, so I'm going to do a 20-year analysis. Mo's going to do a 10.
Okay.
Now, my 20 years isn't necessarily saying it's great, but they've been around for 18, 19 years and losing money, and they're still around. Mm-hmm. So I'm going to do revenue growth of, profit margin. So this is the hard part.
This is very difficult.
Yeah, very, very difficult. PE. And then desired return. So this is the interesting part. So while Mo's doing this, I did revenue growth of 10, 15, and 20%. These are very big differences.
You're doing 20 years? Okay.
Yeah, and the reason being, Okay, they did like $3 billion last year. 20% a year for 20 years would take their revenue.
Oh, I might adjust this after seeing this.
Oh, wow. To $115 billion.
It's not bad.
Is it possible? Sure. That's a big jump, though.
It's huge. It's a huge jump.
But that's why I factored it in my 18% desired annual return. More margin of safety as the revenue growth and assumptions are higher. Profit margin, I did 10, 20, and 30. Again, okay, let's say they're like Microsoft, 30%. Great. Free cash flow margin, same thing. PE, I did 15, 16 and a half, and 18. Same with the price of free cash flow. And the reason being is overall market average is 15. So let's say they just do decent, fine, give them that multiple. They're probably going to have a high return on invested capital because they're a software business. And finally, my lowest return, I actually want to go higher on that one.
I just changed mine to higher.
Actually, I think I'm going to do 13, 16, and 19%.
Okay.
Hit the analyze button. What'd you do, Mo?
So revenue growth, I did 15, 20, and 25. Profit margin, 15, 19, 23. Same for free cash flow margin. PE, 16, 18, and 20. What did you put for PE?
15, 16 and a half, and 18.
Okay. Same for price of free cash flow. Return, 14, 16, and 18.
Yeah, I don't blame you. Now, guys, a couple things before we hit these numbers. I want you guys to realize, like, these are all gross assumptions. We have no idea where it's going to be. That's the key. And if you're new to watching the stock analyzer tool, you need to watch multiple videos to get a hang of it. Once you get the hang of the stock analyzer tool, there's a reason why this is used 1.3 million times in 2022 by our users. It's so useful. It doesn't factor in the balance sheet, but it lets you sit there and make assumptions about the future and tells you what you should pay for the company based on those assumptions, right?
Yep.
That's the big key here. I hit the analyze button. You did too. All right.
Okay. I got $3.70 on the low end, $10 on the high end, middle ground, $6.25.
2 on low, 11 on high, 568 in the middle. And guess what? My puts are right about there.
Yep.
So guys, thanks very much. Subscribe to the channel and check out the $7 for 7 days on everythingmoney.com.